If you're a beginner trader and you're paying for crypto signals or you're even thinking about it, I want you to stop and watch this video before you spend another dollar. Signals do not work for beginners. I've been there, I've paid for them, I've followed them religiously, and I watch my account get completely cooked by them. In this video, I'm going to walk you through why signals fail beginners specifically, what's actually happening to your trading underneath the surface, and the 4 things you should be building instead. Stick with me for the next 10 minutes or so, and you'll walk away with a much clearer picture on how you can escape the beginner's loop of doom and where you should be putting your energy and focus instead. First of all, I want to acknowledge that signals are incredibly appealing as a beginner. I've been there as well. I followed them. I was attracted in the same way that you probably are. The reality is trading is bloody hard when you're new. The charts are noisy. There's so much going on. Every strategy seems to contradict the last one that you learned, and every YouTube influencer is telling you to do something completely different. So when someone shows up and says, "Hey mate, I'll send you my exact entries, just copy exactly what I do," your brain lights up immediately. It feels like the shortcut that you've been looking for the whole time. There's no more decisions that you need to make. There's no more staring at charts wondering, what should I do? There's no more guesswork. You just copy the trade and that's it. It's done. It's easy, except it isn't. Here's what they don't tell you on their sales pages. Signals don't build skills. They build dependency on the person creating the signals. You never learn how to properly filter a setup. You're lucky if you get any information around calculating accurate position sizing, and you never learn the logic behind managing a trade once it's open. And probably most importantly, you never learn how to walk away from the market when it's absolute rubbish. You just show up and press the buttons. And the minute that the signal goes against you, and it will at some point in time, you panic. And this panic is caused by the fact that you don't understand the logic behind the trade. You don't know why you actually took the trade. You don't know what this market premise is based on. And most importantly, you don't understand why you entered, when you should hold, and when you should exit. You're basically running blind. And the only person that can see the runway is the signal provider. And almost always, by the time you've received the signal and actually executed the trade, the signal provider has been in and out of that trade and already used you as exit liquidity. And that's the problem, right? Not everybody does this, but in a lot of cases, you're not a student, you're exit liquidity. Now, I'm not here saying that every single provider is dodgy, because they absolutely are not. There are some really good ones out there. But the fact is, it doesn't matter, because even the best intentioned signal providers out there are still creating dependency and creating a structural problem from the ground up. The fact that you haven't built any skills on your own. Now, the best case, you make a little bit of money, but then the winning streak ends. The signal provider might have a drawdown month and you start giving back all of the profits that you made in the first place. You're back at square one. And the worst case, you blow up your account. The signal provider disappears on Telegram and you're left there to try and pick up the pieces and figure out what happened. I've seen this loop 1,000 times. I've lived this loop too many times. I remember dropping $500 a month for Telegram signals to trade crypto when I was very first learning. I honestly thought I had cracked the holy grail and figured my way to riches. 3 weeks later, the hot streak stopped, the wins stopped piling up, and the guy that was selling me the signals went on to start selling something else completely different. The signal wasn't the problem. The dependency was. So here's how I want you to think about it. Trading is a skill, like anything else that you've learned to do before. Kind of like driving, cooking, anything like this. Now, you don't get better at driving by sitting in the passenger seat and watching somebody else drive. Right? You could do this for 10 years, but you'd still be no closer to being good at driving than you were in the beginning. That's exactly what signals do. They put you in the passenger seat of somebody else's trading, which feels safe until you have to drive yourself. And inevitably, at some point, you are going to need to learn to drive yourself. So when the market changes, the strategy stops working, or the signal provider stops providing these signals, and there's no alert to tell you what you need to do, what happens then? You've built no skills, you've got no process, you don't understand the rules, and you're just hoping that the next alert will save you. And my hot take is, that's not trading. That is gambling based on someone else's opinion. I'll give you another way to picture it. Think about it like this. Now, some of you may know, before I was a trader, I used to run a construction business. Specifically, I used to hang drywall. And on a construction site, anyone can hold any tool. That's the easy bit. The skill is knowing what, when, and why. You can hand a power drill to someone who's never used one before and they can pull the trigger no problems, but they can't build a wall because they don't know what they're looking at. That's the difference between relying on signals and being a trader. Pressing the button is the easy bit. The skill is everything that sits around that. So here's how you fix it. You build 4 things that signals were never going to give you. Number 1, is a pattern that you can identify yourself. This is one clear pattern on a chart that you can recognize without somebody else needing to tell you that it's there. Not 7 indicators, not 20 different confluences, just a single pattern. As we know, patterns repeat, market cycles repeat. Now, if you can spot something that's showing up over and over, then you've got the foundation of your very own trading edge. And this one's actually yours. It's not rented, it's not borrowed, it's yours. So when you're developing this trading edge, this pattern that recurs over and over in the market, you should be able to look at a chart and within a minute or so, you should be able to say, is the pattern there or is it not? It should be pretty evident to you. If it's there, then you trade it. If it's not, then you walk away. That's how you filter a setup. Now, most beginners skip this step. They want the signal because it feels like it's the shortcut. But even the people that are sending these signals, even the good ones, have developed an edge in the market by identifying a repeatable pattern that occurs. So the second thing that you need is a fixed set of rules. These rules are made before you even sit down at the charts, not while the candles are forming. These should be if this, then decisions, okay? It should be a clear set of mechanical rules. For example, when the pattern is here, you do this. When the pattern isn't here, you do that. When the market is messy, you do a third thing. Most traders try to make discretionary decisions in the heat of the moment after a bad night's sleep, and it's a recipe for disaster. The rules that are made in advance protect you from the bad decisions you make on a day when you're not your best. You're not here trying to outsmart the market. You're trying to put bumpers so that you can avoid emotional decisions turning into catastrophic losses on a bad day. That's exactly what these trading rules are for. Now, number 3 is a clear risk framework. This is the part that signal services overlook completely because it's not sexy. Nobody wants to buy it. You need to know before the trade what you're risking, when you're wrong, and how much of your account is on the line for that trade. So when a trade goes against you, and it will no matter what trading system you're trading, it doesn't lead to a blow up. So think about this in terms of the weather, right? You don't decide to bring a jacket out after it's already started pissing down. You check the forecast and you bring it with you at the start of the day. Risk in trading works the same way. You don't figure out where your stop loss is as the trade starts melting. You set it before you press the button while your head is still clear. And this is what keeps you in the game long enough to actually allow compounding to matter. Most beginner traders don't fail because they pick bad entries. They fail because they don't have a clear risk plan, and one bad day wipes out months worth of profits. Now, the 4th thing you need is a clear daily routine. Something short, something repeatable, and something that you can actually fit into your real world life. If you're watching this video, there's a good chance that you've got a family, bills, a full-time job, and real world responsibilities. You're not going to sit at a chart for 10 hours a day, nor should you have to. If your trading process can't be done in one focused hour per day, it's the wrong process for a beginner. I've seen too many beginners burn out, start making revenge trades, and end up back on Telegram looking for the next shortcut. This daily routine is the most underrated aspect of putting together a clear trading process. And it's the thing that actually makes the other 3 points that I've mentioned stick. The pattern, the rules, the risk only work if you can show up consistently day after day, week after week, and month after month. The routine is the container. Without it, everything just leaks out. Now, the 4 points that I've just discussed, the pattern, the rules, the risk, the routine, are exactly what I built the 3XP Academy around. One pattern, one clear set of rules, risk defined before you even exit a trade, one clear daily routine. It's not magic, it's not a signal, it's a clear process you can run by yourself, which is the whole point. Now, if you want a more in-depth walkthrough of how these 4 points work together, how it all fits into a daily trading routine, then I'll leave a link to my 60-minute daily trading blueprint in the description. It goes into a little more depth on how you can put all these together and create your very own daily trading routine. Again, no signals, no predictions, no staring at charts all day. If you've been stuck in the signal loop, then the 60-minute daily trading blueprint is the best place that you can start. Links in the description if you want to grab that anyway. With that being said, that's all I've got for today. So I hope you got some value. If you did, hit the like button, maybe hit subscribe if you want to follow along for more valuable information around trading like this, and I'll see you in the next one.